Hello guys, welcome to PA Traders. In this video, we'll discuss about what is in the money, at the money, out of the money, and how to select the effective strike price in the Bank Nifty, Nifty, and Sensex, so Indian indices. Alright. So before that, if you have not subscribed to my channel, please subscribe. In this channel, we are publishing the videos like stock advice, the investing, personal finance, pre-market, post-market, and lot of useful videos. Definitely this will be useful for you. Let's open the browser and go to nacindia.com. Alright. Here click market data and then click option chain. You can see the options contract here. Nifty, Fin Nifty, Bank Nifty, mid cap, like that. You can see different kind of options here. And then each and every option will have the expiry date. Whatever expiry date you want, you can select the respective expiry date for your futures or options. In case if you want to do the futures or options on the stocks, you can select the respective stocks and then select the respective expiry date. Then you will get the in the money, at the money, and you can find out the respective strike prices. Here I selected the Nifty, hence it is showing these strike prices. In case if you select the Bank Nifty, it will show the Bank Nifty related strike prices. Okay, so let's go to the index in the bottom. You can see two things majorly here. One is the call option, which is coming on the left side, and on the right side you can see the put options. In call options and put options, you can see the similar informations like IO, change in IO, volume, IV, LTP, and lot of other informations. The center one, you can see the strike price. It starts from 20 to 600 and then it's keep adding 50 points for Nifty. So it is coming around 20 to 650 and 700, like that. It's keep adding 50 points. It is going down. First, if you take an example of call options, till 25,800, you can see this all in shadow, and the bottom after 25,850, these all are in white color. Similar in put options, then 25,850 to down onwards, all are in shadow. And at 25,850 and above, right, especially 25,800 and 750, the value is less, 50 points less, right? These all in white color. What is the difference between this white color and shadow, right? The white color means it is out of money and shadow means these all in the money. If you take example of call option, till 25,800, these all are in the money. So the market where currently trading is called at the money. Market is trading in between 25,800 to 25,850, right? So 25,800 is the at the money for call option. 25,850 is the at the money for put option. So anything after 25,800, right? Those all are out of the money for call option. So you can see them in the white color. Similar in put, similar in the put options, anything less than 25,850, all in white color. Those are out of the money. The selection of a strike price is based on whether you are a buyer or seller on calls or puts. For an example, currently market is trading at 25,800 to 25,850, between this range, right? If you are a seller or maybe a buyer in call option, how you can find out the strike price? In case if you are the buyer in the call option, if it is not the expiry day or maybe nearby expiry day, but always safer to trade on the in the money, right? So it is not advisable to trade on the at the money on the expiry day or maybe nearby expiry day, because if the market is going beyond your expectation, then you may lose the entire money. To select the effective strike price, you need to check few things. One is the open interest. So volume of open interest. What is the volume of change in open interest? And then what is the total volume added to that particular strike price? These are the critical things that you need to check to take the decision of finding the respective strike price. In this case, 25,800 have higher volume, higher change in IO, higher IO. In case if the expiry is not nearby, you can take the other money also. Okay, that is fine. But don't trade on the out of the money, because on the expiry day all the out of money will go to zero, so you may lose your money. So it is always safer to trade on the in the money. So be safer, and hope this video is useful for you.